Okay, everyone, this is Chase with Ethical. Oh crap! There we go. Want to make sure y'all could get in. This is Chase with Ethical Trading. Let me share this link a few more pages real quick because I had two other people that definitely wanted to join, and I promised I'd give them a link. So give me just a second to get that over to them. Then we'll do a recap of the charts on multiple things. There. Hang with me for just a second, trying to get this to a couple more people that were looking for it. Hang tight. There we go. Alright, and if there's any specific tickers y'all want to see, feel free to throw those into the chat and I'll take a look at them for you. But primarily going to start by going through several tickers that people are watching with big tech. I know everybody's got all eyes on NVIDIA earnings at the moment. So we will talk a little bit about what's going on right there on the chart. Also, here, let me start with this because I promised some people that were asking about SPX trades, what I was looking for on the chart today when I took a couple of different trades, and I was going to walk through that really quick as a learning opportunity for people. So SPX, definitely not going to recommend most people trade SPX. It moves insanely fast, and you can't really trade a direct correlation of SPY to SPX, even though they're going to be very, very similar, given that this is the index, that SPY is the ETF based off the same similar weightings. Similar to how MNQ ES is based off of SPY, MNQ is based off QQQ, and NASDAQ, so on and so forth, right? But that being said, chart setup, right? What I was telling people this morning that I wanted to be cautious for was we opened and we moved up, right? Especially because right here, this is the opening gap on SPX. This head and shoulders pattern, I was watching that as well as the bull flag that formed here in the morning session. But what we noticed, I'll zoom in here, try to show this to where it actually is going to make sense, because it's a bit harder when there's a lot more and it's going to try to force the volume. But as you notice, we gapped up, we moved up, and then we trade relatively flat. So if you try to jump into calls and you got out right there on SPX, you probably did good. But if you got into calls or you got into puts or anything like too soon, we were in chop zone. And it burns up premiums, right? So this is a good technical lesson for anything, but we're using SPX as an example right now. This is why you look at setups both bullish and bearish, because while there was a bull flag here with the pole and the flag formed up here, it also formed this head and shoulders pattern that you see marked here. So in addition to that, basically when you have news that comes in, for instance, Trump talking tariffs, that only serves as a catalyst. Really, the news or any kind of data release or something like that is an excuse for a move, is how I like to look at it. Hey Felix, what's up, man? So I was watching the head and shoulders for a neckline breakdown, which is also coincidentally right here at this 5992 support level. We also watched it reject multiple times off of 6,000 this morning, right? So it would pop above it and it would reject right back under. It would pop above, it would reject right back under, pop above, reject under on the 15 minute. Okay, so it was having a very hard time at that 6,000 level. But the move that really was the make or break was whenever it broke the neckline here, and then it's kind of hard to see again because the volume profile is wacky once you look at it across the full spread of the day. But if you're looking at this at the time as we were running through, you had high buyer volume that was stepping in, and volume started to taper down, and buyers kind of exhausted at that point. And then at this point, when we had the selling begin, which again, it's kind of hard to see here, but the sellers really stepped up and seller volume was increasing with the selling. So you can see seller volume was strong overall until right there where buyers finally stepped back in at this support level down here. Why do I show that? Because patience really played out very well yet again on SPX. I traded twice today, didn't I? 59.20 puts earlier in the day, those went 120% gains, and then 59.60 puts on this setup went 957% gains. Now I bailed on those well ahead of that. Actually planned on selling a little bit earlier than I did. I could have got more, but ended up selling my last one around 700% gains down in this support zone here. But I wasn't trying to be super greedy. I was following the setup, and I had to run some errands as well, so I needed to bail on it. But sharing that because the same similar setup and movement, we've seen that multiple days in a row this week. Same thing kind of plays out with calls when you're looking at a bullish setup, right? So even yesterday, let me see if I can find that real quick to show you. So yesterday is right here. There's a huge sell-off yesterday, and then scalped some calls right in that zone, I believe. And those are the 5960s. Is what those were yesterday. No, it was right here because we got in. I sold them way too early. Okay, yeah, those 5960s went 529% gains by trading the bounce that came into play on that. So today was one of those examples of why, like, I didn't trade the bounce. For one, you had Nvidia news coming in after hours that had lots of visibility and pressure coming in on it, but also it wasn't looking like there was going to be a significant bounce across the range today because seller volume was strong and kept on pushing. So just sharing that and walking through that. Let me jump up here to Apple and we'll kind of work our way down, getting to Nvidia and talk about how even though that is up 3.67% after hours, unless it makes a much larger move in one direction or the other, options are going to get wrecked on both sides of Nvidia if you're sitting in them on the buyer side. That goes for calls and puts. So Apple, I traded a quick little scalp trade of calls off this support bounce this morning and then exited. The orange line was my kind of exit point, so I trimmed those off. I left a runner just in case for whatever reason this thing ripped. But it's looking more and more like Apple is going to respect the rejection that it had up here, here, and the third time here, and then broke down today. So definitely keep an eye on Apple. I'll post some more detailed analysis with all the text and the targets up and down so that y'all have it, because I know that's a lot easier to look at and reference rather than trying to actually listen to what I'm talking about and remember the levels I mentioned. So instead, I will share that with y'all. I'll post it on all the pages, all the groups, anywhere I've just dropped this link, I'm going to share it there as well, so everyone will have it. Apple, you want to watch out here to make sure and see what's going to happen. Like right now, ultimately, there's a lot of uncertainty with big tech. There's a lot of uncertainty with the tariffs. There's a lot of uncertainty with trade wars and lots of other things, right? A lot of people are looking at Nvidia as the saving grace for tech, as well as the data that's coming tomorrow and Friday. But that being said, there's no guarantees in the market, period. So my recommendation on most of big tech is I'm personally not trading calls or puts on most things. The premiums don't make sense. Risk to reward just doesn't make sense on like big tech or SPY or QQQ right now to swing trade. There's lots of other things I can swing trade and have much better risk to reward. That goes for calls and puts. So just calling that out again. I know some of y'all have heard that many times on the stream, but Nvidia right now, what's going on with Nvidia? Basically, we had earnings and after hours. Of course, they beat. But what we've noticed in the past with Nvidia and earnings is that it's developed such a high expectation of overachieving that even when it comes in as amazing numbers from a business standpoint, which these are tremendous, by the way, it's still lackluster when it comes to the investor sentiment. Thus, a 3.6% give or take move at the given time in aftermarket. With any earnings, I look at it as we never know what's going to happen until opening tomorrow. But you want to be cautious on Nvidia. If you held calls through it and they're further out, maybe it'll pop and they'll go in the money. If you're out of the money, the implied move, at least when I looked at it this afternoon on Nvidia, was over 12% in either direction for the March 21st calls or puts. So less than 12% move equals IV crush, basically is what that means. So options premiums, I sold covered calls. I'm glad I sat in my covered calls through earnings on Nvidia. If it did and pop off nicely, then I would have had to have potentially rolled those covered calls, or maybe they were still out of money. I can't recall what the three strikes were. I think they were 130s, 135s, and let me look real quick to make sure. Some of y'all saw that comment over in Discord. If you like that recommendation, hit it with an emoji and we'll act accordingly. So, derailed a little bit there. Let's see, going back over to Nvidia. Let me find my premiums I sold because I don't want to misspeak to that. Yeah, it was the 133.21s. Okay. So, less than 130 by 321. They expire worthless. Honestly, I'll be able to probably buy to close those. They were already up significantly. So with IV Crush tomorrow, unless we have some huge rip, IV Crush is going to smack those contracts. So looking good for the covered calls on Nvidia. Jumping back up, we did Apple. Let's look Amazon. So Amazon did this breakdown here, and it's trying really hard to hold this back test of the support here at the supply zone. I'm sorry, demand zone. It's been a long day. Previously supply zone turned demand zone, if we want to be proper, right? So watching this to see, is Amazon going to be able to hold the bounce and retracement here, or is it going to reject and move lower? We will find out what the overall data does, as well as the sentiment of after hours movement going on right now. If I click over here, see what our after hours moves got going. Oh man, I was over here misspeaking all this time because I got so used to looking at my screen. So Nvidia's only up 1.75% after hours. So even more so what I said about IV Crush is applicable to that situation. Let me click back on this. Oh, we've got one emoji reaction so far. Watch it, Tonio. AMD. What we got going on AMD? AMD, same thing as what we've looked at previously. AMD cracked the breakdown and lost the 10750 support again. If Nvidia had some super bullish sentiment, it may have played over into AMD and helped it get back over 10750, but it's looking pretty lack right now. What I'm looking for on AMD, because I still really want to go long on AMD, but what I'm looking for is, can it retake 10750? Can it bounce and move out of this downtrend it has been in for freaking ever? And even more so, are we going to break down here and move towards that 94.46 level? Because if we are, that's, significantly lower than where we're at. So it probably makes more sense to consider adding at that point. But I've been patient with AMD for months now, so I'll keep on being patient. Let's see. Google. So Google broke down from that setup it was previously in, and it is moving towards the next gap fill. So I wish I would have left more of the 175 puts I traded, but I took my gains and I bailed on them. It was my plan to exit already, so took them, locked it, ran. but still heavy seller pressure going on there with Google. It's heading towards that 170.53 gap fill. We'll see if it catches a bounce here in this zone, or if it's going to keep on diving, because it looks like it actually already broke this uptrend as well that we've got here. So you broke that trend, you're looking at a move down in this zone too. So keep watching Google. Microsoft, if you look at this on the daily and weekly, let's jump over the weekly real quick to see this a bit more clear. Weekly, it really needs to regain that current trend, right? Especially if it can retake that 404.06 level. Right now it is playing with fire, like hovering around this $400 level. If it can hold 397.17, that's great. Ideally, we can hold 389.17. That cracks, we're probably going to see a move down minimally to 367.18 on Microsoft. So again, not trading calls or puts on Microsoft here because the risk to reward's just not worth it. The setup could break either direction here, but we do have a little bit of dissipation of seller pressure that came into play today. At least volume tapered off. Some of that's probably awaiting the news and data. So we'll see what happens there. But as of right now, this is trying to bounce on the daily. We'll see if tomorrow it can hold a reversal or not. Yeah, I'm going to look at snow here in a minute too, since you are over here chatting about it in the chat. Definitely want to check that out. Pidge, I saw your comment around Goog put. So, like me personally, I will not trade Goog. If you're going to trade Google, trade GOOGL, this ticker here. Don't trade the other. One is the actual tradable active shares. One is the warrants-based shares, and you want Google. There's a lot more actual liquidity and options volume on Google. So if you're going to trade that. If you really feel like you want to trade it, and I'm not saying just flat out like you can't trade options on big tech. Just do it smart. Don't trade something and blow up, a large amount of money. I'm not a big fan of trading, $500+ contracts for something with a safe expiration and a solid strike on these big tech tickers to secure like 20 to 50% gains when I can trade something that is significantly cheaper with a lot more contracts and 50% or more gains and trim a portion of it accordingly, and then ride runners from there. So that's kind of what I've been doing. It's been working really well. Meta tried to attempt a bounce today, so watching to see if it can hold this uptrend, but it did bounce and reject again. After hours, it looks like it is back up over that level at least, so we'll see if it can hold 676. Nvidia, we already checked on and talked through. It looks like it's just not looking so awesome in after hours, but like I mentioned earlier, with earnings, you never know how stuff's going to shake out until the following day, and this is exactly why anyone that's traded with me for a while knows that I'm not a big fan of trading earnings directly. And the reason being is IV crush is what happens 9 times out of 10. Every once in a while, you'll have earnings where people load up calls. It ends up moving more than a measured move. They make huge gains, and sure, they will flood social media with all those huge gains, which are huge, but they're not as huge as they could have been because it was IV spiked. But the drawback to that, too, is those people aren't sharing the other, 9 times out of 10, where those contracts that they purchase get completely and totally wrecked. So, calling that out. If you're really dead set on trading earnings, do it indirectly through tickers that get sympathy. So, for instance, with Nvidia, I went ahead and traded some TSM calls. I did cover my cost basis on the position already. If people weren't in enough contracts, my advisement was, sell the whole position, secure your gains. Let's not be silly. If something's green, never let a green trade go red, right? So, TSM calls, they paid off well. It was a nice cheaper trade for exposure to Nvidia, but I left a very tiny runner position on that. In the event that Nvidia did rip off of earnings, I would have exposure through TSM without getting slammed with IV crush, because the TSM options are not baked full of IV like Nvidia is, because they don't have earnings tonight. So, SMH tied to Nvidia and all the other semiconductors. Tesla, right? People have been asking me about Tesla for months, and y'all know I've been sticking with covered calls on Tesla. But Tesla has broke down from yet another bear flag here, and it has got heavy seller volume still going on. It's very likely going to head to that 473.54 gap fill. and it's also at a critical point to where it is testing this uptrend. So keep an eye on Tesla here to see what it does. This is definitely one that I will not recommend people to trade calls or puts as swings that are expensive, because it can bounce and go higher and puts get burned. It can dive right through a support and calls will get wrecked and never recover. Thus why I sell covered calls on Tesla. But sharing the levels here, I will post an updated analysis with the levels into all the channels and all the groups either tonight or tomorrow for y'all, so that y'all have it for Tesla. But yeah, Tesla's not looking so hot. QQQ and SPY, looking at the daily and weekly, a lot of these are all going to be contingent, for one, on NVIDIA earnings and what it does following earnings with the outlook, but also with the data that we have the remainder of the week. I think that the continued talk of tariffs is continuing to spook the markets, and we are now risking, further sell-off and downside. I posted some super detailed analysis for QQQ and SPY that shows key levels that we need to hold, or, if we break through, what to do accordingly. So look for those. Remind me if you need updated ones and I can pull those for you. But right now we're testing a key make or break zone on QQQ, SPY, and several others. Right now we really need to hold this 514.35 range. If we break down from this and get confirmation with the follow through candle on the daily, it could move quite a bit lower. Short term mid move would be probably to the confluence of this, sorry, there's way too many lines here, the $500 psychological level, which just happens to have confluence with this longer term uptrend, right? If you don't know what I'm talking about, see how this $500 level just happens to be right around that zone where we will intersect with the confluence line of the uptrend as well as the support and the shorter term trend that we've got going on there. So watching that on QQQ, SPY, similar setup going on over here, which makes sense, right? But SPY is now playing with fire, still heavy sell pressure. But if it breaks to the downside of this from this inside bar daily candle, we're probably going to head to the 585 gap. Personally, and I'm not trading based on this, it's just a feeling, because like I said, I'm not in swing calls or puts on QQQ, SPY, or any of this stuff. But for me personally, I would watch out here. I really want to see a bounce, is kind of what I'm trying to say. I would really like to see all this stuff reverse to the upside with some kind of positive catalyst or news. But as of right now, we have yet to see anything like that. So maybe the Fed data the remainder of the week will help us out. IWM has continued to dive, which is kind of what we expected based off what we've been monitoring. So there's multiple things going on here. There's now Head and Shoulders fully intact there that we're treading on the neckline. Combined with the fact that IWM rejected hard at that downtrend line on the weekly. So IWM, if it does confirm a breakdown and rejection here, the measured move is going to put it down at that 204.81 level. Not trading calls or puts on this one either. Just monitoring the setup accordingly and sharing the levels in case there's something that you're in or need to reference it. SPX we already dove in deep earlier. MNQ and all these others, if y'all want my charts or something so that you can trade futures on it, because I know a lot of people are over here trading futures with me now, let me know and I'll kick you a link for it. But on that note, let's switch gears and go to some of these tickers that we got going on here. I got app on the list. The app 11, it looks like, is attempting really hard to hold that bounce, but that's still heavy selling volume on the weekly. What's daily look like? Daily caught a big bounce, it looks like there, but I don't know, that might bounce and move towards the gap fill. So if I recall correctly, the contracts, the premiums are just really wacky on app, so I wouldn't personally probably mess with it as any kind of more significant expensive swing. I might scalp or trade a really high risk lotto on it, but ultimately this thing is too high of a risk for me to mess with that setup. Let me see. Tickers. And yeah, we'll talk through crypto here in just a second. Let me jump back over, make sure I get everybody. Alright, checking 3 different places all at once here. Yeah, Rui mentioned the additional tariff talks. It's an excellent point. Clean Spark, let me pull it up, Rui. Yeah, so Clean Spark, let me show you on the weekly and stuff. So, again, crypto related, right? So, y'all have all seen kind of the pullback that's going on with crypto right now. It's heading towards levels, most of the cryptos are heading towards levels where it's a good place to start accumulating longer term positions. But like I mentioned on the previous chats and the lounges of several discords the other day, if you're going to trade or mess with crypto at all, you really have to decide what kind of crypto intent you have. And what I mean is, are you planning on accumulating and buying crypto longer term in this range, at which point you don't care about the short term fluctuations? Or are you trying to buy crypto to trade it based off the given range that we're currently in? So, not saying you can't do one or the other, but if I'm trading crypto, I use leveraged crypto futures. Made 75% gains on a Bitcoin leveraged future last night. Shared that with some people, and then I got out. Off a head and shoulder setup, or inverse head and shoulder setup that Bitcoin played out on the 5 and 15 minute, and it bounced to the upside, took my gains, and ran, right? If you're trying to trade the range on crypto directly, it can be hit or miss on depending on what platform you're using of whether or not it's going to give you gains. Because typically with the spread that's baked into something like Robinhood, you're going to need a more significant move to offset any kind of like a 3 to 5% move on the crypto, because you need to offset the spread as well as their fees that they have baked in. Even though it looks like they don't have fees, you're paying more for the crypto on Robinhood and Coinbase and others. Clean Spark, we're breaking to the downside here, Rui. So watching these levels and ranges, don't know why that's stuck where I stuck it. Trying to mark it there. Because this, right? So there's 4 touch points there. You got support down here in this range, so a lot of these crypto related stocks are considering bouncing if Bitcoin and crypto bounces as a whole, which I'm curious which levels we're at right now. Yeah, we're heading into kind of that in-between zone, which that's the only drawback to when you have these big huge gap ups, or not gap ups because there's not gaps on crypto daily, right? But that's the drawback to when you have these huge green candles on Bitcoin and others, is that you sort of have these no man's land type regions here where there's not a whole lot of clear support and resistance levels without digging in and going into the 1 hour and 4 hour. So zones I'd be watching here. I've shared all the breakdown and detailed analysis for Bitcoin, but sharing, and actually for most of those, but sharing that because that is going to directly impact what's up with Mara and After Hours. They had earnings day, didn't they? Wow. Look at Mara's results. What was the implied move on Mara? Hold on, I gotta look. %18% was the implied move on Mara. So IV crush galore right there again. So good opportunity to, if you're wanting to go long on crypto stocks, especially something like this after earnings IV crush occurs, be a good opportunity. But Mara and some of these others are probably in a similar situation to Bitcoin where they're heading back to previous support zones here. If I look at the weekly, yeah, they had earnings, so you got that movement based off earnings, but I'd be looking for that back test at 991. The ones people really care about though, coin and MicroStrategy, right? So if I look over at Coinbase is trying to actually hold the support zone here. Coinbase also has a gap fill right here at 197.25, so I'd be looking for a bounce at those levels. Why is that not here? See if it retakes that trend line and bounces off these support levels. If not, you can see more downside from the area, especially if it doesn't bounce at 197. MicroStrategy, it filled the gap and then some, so I want to add my shares. I'm just waiting for reversal bounce, which it tried to today, but I want to see the follow through and actually print the reversal candle so that I can add some shares and start selling covered calls on those MicroStrategy shares. SN asked, is there a way to learn my level? So If you're wanting to know what the lines mean, look in the description of the video. Is that what you're referring to? Because each of those has specific meaning. Dotted yellow is minor support or resistance. Solid yellow is more significant levels of support and resistance. I'm going to jump over to Palantir to show and talk through that since someone asked about Palantir. But you can see historically here, there was a gap right here on Palantir, which is why it's still a dotted purple. This gap actually got filled. So once the gap gets filled, I mark it as solid purple, thus gap filled. And I do that because historical gap fill levels end up serving as support and resistance levels later on. So watching this, looking for Palantir to catch a bounce because I want to add longer term calls, but I want to see signs of a reversal before I do so. But definitely a great zone for me to go about adding calls once I get the reversal. I will feel better with any stock once it fills a gap that it leaves on the chart, because gaps never sit well with me, because at some point, sooner or later, it's probably going to fill the gap. When it comes to gap fill levels, it really it's a matter of when, whether it's next week, tomorrow, a year from now, when it's going to fill the gap. But gap fills tend to get done on charts. Sorry, glancing over here real quick because I've got some other requests I want to cover. Yep. BBAI at the request, so it's looking for a gap fill as well here. I know I posted detailed analysis of that, so if y'all want that, let me know. It should be in the BB. If you search in any of the Discords I'm in or the Facebook groups, just type in BBAI and Chase Rice and it'll pop up. But let's see. What did Lucid end up doing today? Did it ever bounce? Nope. Deep diving. Glad I held off on the calls. So played out the inverse head and shoulders previously that we were trading. And that breakout, but it's diving. Ooh, rocket. Yep, so rocket, the calls, I went ahead and covered my cost basis on them already, so we broke out of this falling wedge we got going on here, and then also back tested and bounced, so those rocket calls actually paid off pretty well. Definitely still watching that. The other ones are there in the chat. So SN for, okay, lots of good questions there. So Lauren, let me talk through that here in just a second for you, and I will explain what I'm looking for a reversal. SN for support and resistance, yes. Let me, hold on. There's a ticker that someone requested I do TA on that I didn't have. Let me find it. Stevie requested it. And I will literally show you how I'm going to go about it. Because I'll tell you with TA and drawing levels and support and resistance and everything, everyone has a little bit different way they go about it. That being said, I tend to be a bit more conservative with the way I draw my lines. And that seems to work really well. And I align my lines with what I'm seeing over on the flows as well. So you can see here I've got QUBT, which is quantum computing, that no lines are drawn. So if I was going to draw TA on this, first off, I'm going to escape, I'd start on the weekly. And I would look at the weekly candles and look for levels that are clear support and resistance zones. So you can see right here, definitely some resistance going on there. It rejected over here again. That was a point of key rejection. So I'm actually going to mark this one yellow just because I know that it's tagged this multiple times based off seeing it on the weekly there. It's probably doing the same thing on the daily, but you can see historically that was a key level. Same thing as I'm kind of working my way down. If there's zones, which these support and resistance levels I'm drawing, these are supply and demand zones is essentially what these are. And when I say I'm conservative about it, like why am I drawing something in one place versus another, it's because I want to draw my zones and my support and resistance lines where there's as many points of contact as possible, because those zones are going to be the most respected. So I never even looked over here to the right. I was just looking right here, but you can see actually where I drew that is where we exactly broke through and bounced right there on this last run. So the more you practice charting and drawing lines, the better you'll get at sort of identifying stuff and then noticing different patterns that are across the time frames regardless. So it's just one of those things that do it more and more, you'll get better and better at it. It helps that I have people ask me for TA all the time, so I get lots of practice, right? Plus, I just love data. So, and honestly, this isn't a fantastic ticker necessarily for perfect technicals because it had a lot of movement that came off of AI and just hype and other things. But even then, you can see a lot of the technicals are completely and totally valid. So, um, I started on the weekly. We drew some lines based off the weekly. Now I'm on the daily, and I'm looking for similar types of consistency with levels of support and resistance. So here in this zone, I can see that there was a rejection there, there, and over here, right? And again, there's no exact perfect way to go about this. And normally I probably wouldn't even put this many lines on there because if I look back, they probably aren't as significant, but it all depends also on what type of trading you're doing. If you're trading shorter term swings, tighter time frames, more volatile stuff that you want to lock your gains more quickly, then you might mark a few more levels that are respected across different zones. I'm noticing here too that like this level right here, for instance, and I'm going to show you because I'm betting there's a reversal right there. So yeah, signs of reversal, right? Bam. And I'm always looking for confirmation. If I see a wick or a candle pop above, but then the following candle reject back below, that is not confirmation, that's rejection. And then I'm looking for follow through on the following candle of a confirmation of the rejection. So it rejected there on that candle. The next candle opened and closed below that resistance, and more importantly, it opened below this candle close, and then it moved further down, right? So it bounced, and then it moved and it rejected again off that level. And again, just one random example here going through this one, but that there's some cleaner examples I can show you as we kind of go through different tickers in the coming days and weeks. But what do I see here? And like I said, the more you do this, the more stuff stands out. But I'm putting my gap fill level here, like the one I showed a minute ago, right? Because this is a gap down on the daily that has not been filled. So I'm marking that. There's actually several more down here. I'm not going to mess with marking all those right now. But I'd be watching here to see, do we end up catching a bounce and filling that? Also, at first glance, there's a head and shoulders here. I know that's not as obvious for most people probably until you look at this more and more and you'll start to notice that kind of stuff. But there is definitely a head and shoulders in play on this ticker, similar to what I showed earlier on SPX, right? So that head and shoulders is there. Neckline technically is broke. Technically, looking at that too, it's a little concerning because it looks like it broke and rejected. Broke, retraced, and rejected off the neckline. So if I was to guess here, unless some kind of catalyst invalidates that head and shoulders pattern that we have here, this thing is going to break and minimally move to the downside to the support levels below. Let's say this was a completely and totally valid head and shoulders, and everything, the measured move that head and shoulders would be expected to make is the height of the head to the neckline. And I always go with the shortest of whichever one is there, which that's a 75% drop. Again, very volatile, very wide range percentage moving ticker. So you could mark 75%, but what I normally am doing is I'm looking at support levels below for something like this, similar to what we looked at on SPX when it broke to the downside on the 5 minute. My first target level that I would have considered taking profit at would have been right here if I saw at the 59.79 it attempting to bounce on the 5 minute, which it didn't. Seller volume was strong and it blew right through that support level. And then moved down right here and it consolidated a little bit right here. So you know what, this is actually a better place to explain to you what I'm looking for. Again, like I said a minute ago, it really depends on the time frame you're trading for how heavy and how frequent you want lines. I know there's tons of lines on this chart, but that's because we're trading SPX, very rapid, very quick intraday movements, and I was literally marking support levels for today's zones where you could see a reversals occurring or gap ups occurring, as well as you can see there's some lines here from yesterday, which I could probably consider removing like that. Reason I didn't is because that level was resistance here, resistance here, resistance here, resistance here, turned into support right here. But then you can see it was serving as a resistance level right over here too. So obviously that 5970 level is significant to this one. So I could probably go ahead and mark that solid yellow. The drawback to charting and drawing this many levels of support and resistance on stuff is it can get really messy and confusing if you're not clear on why you drew lines in certain places, or if you start to vary on the type of lines you draw. That's why I stick with a very, very specific legend that you can see in the description for support levels, resistance levels, certain types of trend lines, certain types of patterns. I started recently using the dotted orange as kind of my last ditch target level for closing out a runner on a position. So that's something I'm monitoring right now. Was that 5920 level, which you can see I marked that yesterday, and that was actually the level in the second breakdown that I locked my gain. So hopefully all that chaos right there made some sort of sense, because I know I talked through tons of different technical aspects there. Again, the more you actually do TA and the more you kind of look at charts and people walk through them more and more, the more that will start to make sense. If I look on SPY, it's probably got a very similar setup. Yeah, so the same setups here. You can see support and resistance levels are in play. Although I wasn't looking at SPY directly, the head and shoulders pattern and the other components are here as well. So you know what, let's draw them together. So we came in right here, left shoulder, neckline, head, neckline, high. So when it broke down right there and it broke through that support zone, that head and shoulders breakdown measured move would have been about 0.3%, which doesn't sound like a lot, but that's actually a big deal when you're talking about SPY. And 0.3%, there's not really a lot of stuff out in the zone there. Actually, it's about what the level would have been for the support zone at open, if you look over here. That being said, I didn't lock gains on SPX in that zone, or I think people ultimately, you wouldn't want to necessarily just sell at 0.3%. Maybe you set a stop loss there if you're in puts, but there was strong selling volume and momentum that carried through. So if I'd seen hesitation on this setup, if I was trading it and my measured move was 0.3%, that put me right in here. If I saw a potential bounce happening in that zone on the 5 and 15 minute, maybe I'd go ahead and lock or minimally trim as you're going down. But since this thing blew right through that measured move, the next target I would have had on this would have been the next support level, which again, this thing blew through the support here. It bounced and rejected at that support as turned resistance, and then dove deeper and blew through the support level here. But then it retook it, rejected again at that previous support and resistance, and then moved down. I mean, these levels, I haven't touched these levels in days or potentially weeks, and you can see how well it was respected. So that's why the approach of drawing the historical supply and demand zones and levels this way, it works, because you have buyers and sellers that are setting sells in those areas. One thing I did not mention that I need to explain real quick on why this thing dove so hard aside from the tariffs and why we stayed in more so, let me show you really quick, was the gamma exposure that was on SPY at that time. And hopefully it still shows. Okay, yeah, it does. So when SPY tagged that 595 level, this huge gamma exposure level here of negative, what happens basically is you've got all these, I've got a more detailed breakdown that talks through it better I can share with y'all, but basically selling intensified as a result of that, because the options had so much gamma exposure that they cannot let it get back in that zone. Like if those options are in that range, the big boys are losing their money. So whenever we broke through that level, it was at 1230 and we dove hard. If I look back over here at 1230, notice how it was testing the support, and I saw that they were going to need to push it past that gamma exposure level, and it just blew past it. And that shows you where the selling intensified so that they could actually get away from it. So multiple things going on there, a bit more complex, because yes, it's looking at a lot more than just the chart levels, but there's multiple tools that I found used in combination work really, really well for consistently making gains on quite a few things. So definitely keep an eye on some of those things. Tony's over here sharing his paper trading account for futures, it looks like. Yeah, dude, I went live with all 5 of my top set futures accounts today. and paid 4K on the account off of that first trade, and then it was copy trade across the other 4 accounts, so 4K total. So looking forward to using TopStep more tomorrow across all 5 futures accounts. Any other tickers y'all want me to cover for our wrap up? Let me check and make sure there's nothing else. Got some positivity tea. Man, Cowboy's got his Wyckoff over here. I want to look at Snow. I love his Wyckoff method. Snow caught that big pop off earnings, it looks like. I don't know what the implied move was on it. Hey, Snow's trying to push back up. Interesting. I'll have to check out Snow again tomorrow. Trying to look over here on the list and see if there's any big movers that we need to touch on. Who else had earnings in after hours today? Ooh, I wanted to see what AMC ended up doing as a result of earnings. Oh man, it pumped and then got dumped. Of course it did. So this is a good example of why it's always a good idea to lock gains on trades when you hit a resistance level like that. So I know most of us trimmed to cover costs, at least on our calls, and then rejected, which we were all in short-term calls and locked our gains and got out. But this is why supply and demand zones work. If you're in calls, sell or trim as you hit resistance levels. If you're in puts, sell or trim as you hit support levels. No point in just sitting in positions in hopes and dreams and hoping it moves somewhere. Not loving the head and shoulders GME has developed at this point, but still have GME love in my heart. So we'll see what happens with GME. And Biz over here trying to come up with a comeback today. Uber's another one that if I see a confirmation of a reversal, I really want to add calls because I saw some very interesting flow movement on Uber the other day. Live chat. Oh, I didn't realize I had this thing locked down a minute ago to where it was only showing the top chat. Now that I see live chat, I'm hoping I didn't miss anybody's messages because I see there's a few more. Princess Certified Top G. Awesome, dude. MU, I was tracking this for some people. This thing is still in this huge bear flag, so I don't love that. But that is a massive time frame bear flag, so watching that. Sound played out that downside measured move perfectly, like perfectly, and bounced. If I see a reversal actually confirm here and it moves above 1019 with strong buying volume, especially if we can get past earnings tomorrow, I'm going to probably add some fresh calls and shares on Sound. We'll see. SoFi is one that, like, it's still not bothering me because we're holding on the weekly this range, and in fact it's actually looking really good on the weekly with the big wick. So we'll see if it catches a bounce tomorrow. It technically has a falling wedge breakout here, but I want to see continued movement to the upside. I want to make sure that's not just some kind of weak market sentiment movement that's going on there. I want to add more calls longer term for SoFi in this zone because I love this zone on SoFi and it's still looking good. There is a head and shoulders there I'm monitoring as well, but watching it to see if it's going to invalidate it. Options are very cheap on SoFi in comparison to big tech, so that's why I'm a bit more comfortable risk to reward with trading an option on SoFi for maybe 40, 50, even $100 as compared to trading something that's $500 a contract or more for a reasonable strike in July or September. Rum looks like it's wanting to die. Chewy catching a bounce again, so that's looking good. Mobilize trying to hold its support zone as well. Celsius trying really hard not to want to go YOLO a bunch of money at Celsius right now just because of 12 and all his nonsense going on with it, but Celsius, definitely keep an eye on that. See what else we got. Alright, you're going to see the potential swing section. It'll be okay. So T, I know a lot of people have been trading calls on T. This thing needed a breather. Those calls have been running. So T's trying to finally retrace a little bit and relax. So keep an eye on that. Intel, looking for a good bounce opportunity to go long on Intel again. Rivian, we're heading down and trying to make this measured move to the downside, right? So this is why you monitor both directions. It's AI looking like an after hours. It looks like it moved back down. It already lost that key support level. Applied Digital. Applied's trying to retake that level, which is interesting. Somebody remind me to look at Applied again tomorrow and look at potentially adding something new on it. GitLab's another one I've been watching to see what it does in the setup. It looks like it's breaking to the downside box. They're competitors, so therefore it's keep an eye on it. Fubo. So we traded some calls that gave nice gains 2 days ago and yesterday. This is why you definitely don't want to sit too long in something that's really volatile. They popped, offered nice gains, and then here we are diving to support again. We already looked at BP. Looked at that too. Alright. I think I covered all the tickers that are in the request queue. Let me check real quick on the Discord, so I want to make sure I don't skip over anybody. Poet. The Poet. Analyzer wants us to look at Poet. Oh, dude, this is one of those super low volume tickers. I can tell you already based off the price action. I mean, I see some stuff. I see some bullish and some bearish stuff. I tell you what, throw this one in the chart request thing, and I'll go chart it and draw the levels on it and draw the patterns so that you have them. And then I'll pull my TA thing using my AI bot. On that note, I think I've covered all the ones that are at least in this primary chat. Let me jump over here real quick. Ooh, somebody said Nvidia dove off a cliff. What's up? Oh, it's not that dead yet. They're just not getting the positive outlook everyone hoped. So therefore, like, and again, they beat estimates, right? But like I said earlier, people have come to expect Nvidia to blow out of the water, which they delivered amazing results. But the outlook's looking grim and weak. And if any comments were made, which obviously I'm not on the webcast because I'm on the stream, but any comments were made about anything with tariffs and the potential impact of supply chain, blah, 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 then that's not going to look good for investors. So, just calling it out. On that note, I will go ahead and wrap up the stream. If there's any other stuff you want me to take a look at, shoot me a message. We'll take a look at it. Hopefully you found this valuable. If you don't mind, hit the like and subscribe button. Share it, whatever you feel floats your boat, and we'll be back at tomorrow. Thanks all.